protocols that aren't optimized for longevity, building tokens not optimized for utility, but optimized for exit event that will make funds and team very, very wealthy, but probably come at the expense of the long-term functioning of the protocol. As mentioned, rather than selling any tokens, rather than allocating liquid tokens to team members that the utility of which, right, would be them eventually selling in some way to extract value. The foundations have locked tokens. This makes the foundations the same as anybody else. The same as any fund like Coinbase Ventures, who's bought a bunch of Arrow, locked it all, and is voting each week. And this alignment of incentives, there is functionally no difference between the foundations and their ability to participate and anybody else's ability to participate.
All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinion of DigOp or their respective organizations. This podcast is for informational purposes only and should not be relied upon for tax, investment, or legal-related decisions. Podcast participants may hold positions in tokens or assets discussed over the course of this conversation. Now, with that out of the way, let's jump in. Alex, Ace, thanks for joining us, guys. This is a conversation that I've personally really been looking forward to. Velodrome, Aerodrome is, for me, like a special protocol. I was just sharing some memories with you guys of when we first got involved in crypto full time. I have some great memories of the Solidly days, and for our listeners, that might not mean very much, but you guys can probably give a little more background. But before I ramble on more, Alex and Ace, just to give you a little more background on what we are doing with this podcast, we sort of have, like, cheekily and sort of aggressively in a way named it Convince Me. And this isn't for you guys here to, we're not here to convince us, guys, but
we are.
But we but it's I think a lot of people in the industry and outside of the industry are kind of at this point now where it's like, all right, we're tired of the tokens that were just made to be dumped on retail. We're tired of these sort of like themes that really didn't go anywhere beyond just a pure speculative mania, and we're sort of ready to find the things that are like actually producing value, that are actually producing cash flows, that are where those cash flows arise because of like an actual, use case or something like this, right?
Yeah, real utility to them as opposed to just money out of some VC's pocket that's propping stuff up.
Right. Yeah. So that's where we're coming from. But, from there, I'm just going to toss it over to you guys. And please give your background, where you guys are coming from with Velodrome, and I'll just let you take it from there.
Yeah. You could probably summarize that, right, in the classic line of it's all just so tiring, isn't it?
It's a little tiring.
We're tired. Yeah, it's maybe we need a different sentiment meter in the industry. It's not just fear and greed; it's just tiresome.
It should be a good podcast name. Just we're tired.
Yeah, we're all so tired. Tired only.
Yeah.
But yeah, no, I'm super excited to chat with you guys. Obviously, we've had a relationship, right, since the earliest days of Velodrome, and just excited to dig into it. I'll start with my intro. My name is Alex, one of the original contributors to both Velodrome and Aerodrome. My background, my history, like many people, I think in DeFi is like a very non-linear path, right? I started my career working in politics and campaigns. I went and worked in big tech for a while, went and worked in sort of brand and business strategy consulting for a while. And I got hooked in DeFi summer, it's those pandemic times, being locked in your house, I decided to build a gaming PC, and then was like, hey, I could maybe use this gaming PC to mine some Bitcoin, right? And suddenly I was, having thousands of dollars seemingly created out of nowhere. And then I could take these tokens and bring them on chain and do things with them and earn yield and participate in protocols and all this fun stuff. And it's just like Alice in Wonderland, you're falling deeper and deeper down the rabbit hole. And before I knew it, this is all I wanted to do. I quit my job. I didn't have a plan. The plan was not to end up building. I think it was kind of like, let's just keep going down the rabbit hole and see what happens. But yeah, got connected to a lot of good people, as you do in this space, right? If you just pop into Discords, if you make friends, and Ace was like one of my very first friends I made in the DeFi space, helping to show me the ropes. Things just start happening, right? And that was the journey, right, from Solidly to Velodrome to Aerodrome and beyond, which I'm sure we'll get into as we talk here.
Yep. Hey guys, thanks for having us on. And I learned that you refer to yourselves as Dig Op. So everybody who's listening for the first time and is not familiar, it's Dig Op, and it's a lot easier to say. So
thank you for doing that.
Yeah, and I agree with you guys. Like, I think the point you're trying to make early on is that we're all we were probably brought into crypto and DeFi for the non-nihilistic reasons, perhaps more the holistic and positive sum reasons. And I think that's a theme that you'll find across the whole Aerodrome, Velodrome team. Anybody who started a protocol in 2022, right between, Luna blowing up and FTX, exit scamming or the skeletons coming out of the closet, has to have a belief in the tech and the positive externalities that Web3 and blockchain rails bring to the world. And I think that was very much a reason that I became more than just an enthusiast, because I think I discovered Ethereum and Bitcoin in late 2016, and I was before that a 12-year professional in the renewable energy world. I had a lot of statistics and business background, but I never really operated in a financial capacity. So blockchain really exposed me to finance, and I got super, super curious and geeked out with numbers. And obviously when they go up, it's a lot easier to get sucked in. So I've been through a few cycles now. This is certainly the most difficult, I would say, for somebody who's gotten captured by the DeFi composability and interoperability and trying new wallets and new protocols. And what we really see today is a lot of just gambling. And I'd like to gamble, it's fun, but I don't see the positive sum aspects right now. Right. So what we're trying to do with Velodrome and Aerodrome are really create a balanced system for all stakeholders. We're providing a service for protocols, liquidity providers, with crowdsourcing market makers for the first time, and I think that's a really cool thing. And then finally, we have this kind of invested voting layer who really cares about success and the sustainability of the protocol. So I'll stop there. I think that's sort of I don't want to get too much deeper, but yeah, really appreciate you guys bringing us on.
Yeah, perfect. And I think you mentioned about the gambling and kind of the speculation aspect, and I also enjoy kind of playing around with some of that, but I don't know that gambling was something that humanity needed, further optimized. I think it scratched the itches it needed to scratch as it was, and making it more efficient is not necessarily you said positive.
Yeah, it's also just it's a big glaring target, right? I mean, I played online poker in the early 2000s, and we saw how fast that got shut down. Right. So I don't see a lot of upside if we're trying to make this thing much bigger and much more accessible.
Yeah, it's actually funny you brought up online poker, because one of the use cases Phil and I talked about recently was back when I guess Full Tilt and some of these other poker sites got shut down on Black Friday because they realized hey, these sites don't have the money that these accounts say that they should have, right? When you look at all the poker accounts, they don't reflect what's in the, I can't remember if it was Full Tilt or PokerStars. There was a bunch of these sites where they had just been burning player money on marketing and, sponsors and things like that. And we're saying, well, I mean, I guess if you had, verifiable proof that the money's in these accounts, like that makes it cool. I mean, that's a better way to run a poker site. But yeah, I guess that was just one instance of what Phil and I were talking about real utility over some issues that have happened in the past and in other use cases.
Bring it on chain.
Yeah, exactly.
So, if you guys wouldn't mind, I would, Alex, you mentioned, these names like Solidly and, I think there's this whole world, and, you can flesh it out as much as you feel the need to and sort of like give that history of like how you guys got to where you are today. Again, I have very fond memories of that time, but I'm going to let you, I would love to just kind of like hear your perspective, how this whole thing started and, how that sort of has like influenced the story of where you guys are today.
Yeah. So, I'll just start by saying, like, we've been we started putting out some content on Mir that I think is really, really interesting, and it's starting from the point of the first innovations in the DEX world, and it's kind of taking us through this journey to where we're at today. So I'll tell the story maybe at a high level here, but we're also publishing, I think, a lot of really interesting thinking here. But I mean, you have to even just, I think, go a step backwards, right? Which is the one of the biggest innovations we've had in DeFi was the design and implementation of automated market makers. And obviously, like, Uniswap was the big pioneer here, in particular with UniV2 style pools. From there we saw, additional mechanisms layered on, right? Just like the sushi vampire attack. What happens if we take this AMM model and we layer on an incentivization layer on top of that, right? And then you go from there into Curve, which is, what if these incentives through sort of token emissions had real on-chain utility, right? A portion of the fees generated by these AMMs was going back to token holders and participants if they lock their token, if they participate in the function of the protocol. And then on top of...
And if I can, to elucidate that point just a little bit, like what you're talking about there, that particular innovation with Curve, like the objective there was to actually use the token. Like the utility of the token becomes, how can we use this thing to drive incentives for building liquidity, like maintaining liquidity and rewarding the liquidity providers. And so, I feel like that is an interesting point for someone who might hear this from traditional finance, right? Because they could look at the automated market maker mechanism and they might say, oh, why would I do this? Why wouldn't I just use a classic central limit order book?
Sure.
And there's actually some really interesting, you just brought up some really interesting use cases, like the way it started is just this very simple automated market maker, which is a mechanism where you pull two assets together, and then this enables swapping between those two or more assets, just whatever assets are in this pool. And this continued to grow through time, and just starting with that simple mechanism, you then started layering on these other features effectively on top of that thing.
Yeah, exactly. Which changes the of course dynamics for different participants in the systems, right? But of course, like with Uni and Sushi, they use their tokens to add an additional incentive layer on top of these pools, right? Compensate liquidity providers, not just through fees, but through these token incentives. But the interesting thing was these tokens didn't have much utility, right? If you are, very, very cynical, you could say, governance is a meme. There's no direct value accrual here. Fundamentally, if you're governing through, I guess, like snapshots, that's really just like an off-chain thing that's directing some entity to do something. This isn't really like decentralized finance. That isn't real, like enforceable on-chain utility. And so Curve kind of took that to the next level, right? Where this token was actually useful, right? You could lock it, and now you directed the flow of those incentives, right? You could say which pools got those incentives, and your incentive for doing that work, right, facilitating the function of the protocol in theoretically optimal ways, was a percentage of the fee capture that those pools actually created. So this was like a really interesting, I think, iteration on how you combine AMM incentives and making sure that token has real on-chain utility. And then there was like, a number of innovative things, of course, built on top of Curve, which was, things like Convex, right? Which is like aggregating that vote power and allowing protocols to, add incentives on top of, the token incentives to direct even more value to bootstrap their pools, build liquidity on their tokens. Then you had things like Vodium, right? Which was saying like, maybe you as a participant, you don't want to work on that. You don't want to do this each week. Couldn't you just delegate your voting power to somebody who's going to automatically vote for you and then compound your rewards and deliver them to them? So that like kind of gets us to that point, right? Where around Solidly's launch, where we had all of these very interesting AMM primitives, all who had experimented with different types of like economic models and ways of aligning incentives across participants. And I think fundamentally what Solidly was, which was of course designed by Andre Cronje, who is responsible for many of the great first primitives, right, in DeFi, was saying like, hey, wouldn't it make sense to take the best parts of all of these systems of Uniswap, of Curve, of Convex, take everything we've learned about what's worked really well about them, what maybe hasn't, and build them all into a singular DEX model, right? Where if you're looking for Uni V2 style AMMs, that's built in. If you're looking for Curve style stable swap AMMs, that's built in. If you're looking for that sort of VE style on-chain utility token incentives, like that's all built in. So what if we built this all into a single model? We really streamlined the design, we streamlined the economics of it, put it into a single wrapper and deployed it. Wouldn't this be like the next big shift, right, in the DEX landscape? You no longer have to go to 4 different DEXs depending on what you're looking for. There's just one place to go. So that was like, I think, the original idea behind Solidly. And for those of us who were like there for that moment, that was like the last big hurrah, right, of DeFi in the last cycle. Billions of value flowing into Phantom with all of this speculation around this next generation DEX, built by one of the godfathers of DeFi. And then, of course, we know what happened, which was just like one punch after the other, right? We were maybe suspecting we were at the end of the cycle, but the end of the cycle came very fast, right? We discovered, as people who were very close to it, some fundamental issues maybe in the original core Solidly design, right? I think the vision was there, all of the components were there, but there were some, bugs, there were some, economic decisions that were suboptimal. There were things that weren't quite right. And then, of course, it was, Andre, I think is kind of famous for sometimes saying like, hey, I'm going to give you the thing, but like, as soon as I want to, bolt, it's yours, but, I'm going to bolt, Andre left, just one thing after another happened. And so Solidly itself, wasn't successful on Phantom. But since we were very close to the model, we were just inventorying the things that we thought could be fixed, right? Could be improved. We believed in the vision that this was a next gen DEX that combined the best parts of all of the biggest winners, up until that point. And so we basically, as soon as we, I think, saw the writing on the wall for Solidly, we started taking that list and saying, here are the things we would change, we would build, we would improve. And if we deploy this in an ecosystem primed for growth, even if the sort of cycle's ending and all these alt L1s that have been heavily incentivizing start bleeding out, And there are some participants who maybe just take their money out of DeFi, out of crypto, and they go and rest for a while. There will still be pockets of growth. And so our bet was on Ethereum L2s. We thought Ethereum L2s were going to bring all the benefits that those Alt L1s brought. They're going to run many of the same playbooks that those brought, but within the system of Ethereum. So even if the sector as a whole was shrinking, that's where the growth was going to be. So that's why we went to Optimism initially. And, I think that bet very, very much played out because we've seen kind of the ascendancy of Ethereum L2s now, right? It's no longer speculation that's where so much of the growth and activity is going to be.
Right. I don't know if you've got some highlight reel just numbers you could throw out for where you guys are placed on Optimism or Base as far as TVL, or maybe some TVL numbers or volume numbers. I get to see the revenue that lock tokens on Velodrome as well, and some of those weekly numbers are huge. So
yeah. I mean, I think the highlights right now, the numbers that I think really help to illustrate the success of the model. I think that there may be three of them that I'd highlight. I mean, the first is that Aerodrome year to date, right, has generated more revenue than almost every other DEX combined. So that is wild, right? You have to add up the rest of the DEX infrastructure, many of whom who live on chains, have orders of magnitude more TVL. It's generating more revenue than the rest of them,
including
combined.
the layer 1 mainnet Ethereum DEXs.
Yeah, you got it. So that is a stunning statistic. And then you look at market share, right? What is Aerodrome's market share, relative to UniV3 on Base? And there you see it's, taking something like 85% of the total volume relative to UniV3. So 3x plus, over 2x, I think it's 2.5 times the TVL.
And that's on Base itself?
That's on Base, yeah.
Okay.
So it's so interesting because I think it's been thought for a long time that, Uni was unassailable in terms of its volume lead, right? You could have DEXs that maybe specialize or optimize in other things, but if Uniswap is going to be on a network, they're going to end up owning all the volume there. And I think that is not the case, right? And at this lapse around Uniswap in volume terms on Base and on Optimism. And then the final stat I would highlight, and this is the one that I think is really, really stunning, which is the highest volume pool for wrapped ETH, USDC trading, is no longer on Ethereum mainnet. That is not the place where the largest amount of volume activity is happening anymore. It is happening on Base, and it is happening on Aerodrome. So you can sort by the highest volume pools of DeFi, and Aerodrome, their wrapped ETH USDC pool is doing more volume than wrapped ETH USDC pool on any other network or in any other DEX. And that volume has been so significant that it's even past the amount of volume that is happening most days on Coinbase exchange for ETH volume. Wow. So that just goes to show the scale of the impact here.
Yeah, and I want to kind of take a look at what's behind the numbers. All those stats are kind of eye-opening, but can often be ignored because people are used to seeing on-chain volumes from Uniswap and Curve and Balancer, and they're like, okay, so what does that actually mean? Because you have to tie the volumes back to the economic model that Velodrome and Aerodrome incorporate, and Alex mentioned, over $100 million in revenues, but it's really rewards that come from, the incentives for voters on the platform and all the fees that are generated by the swaps. And that's one of the most unique components is when it comes to revenues, 100% of those are going to voters and token lockers. And I think that's a concept people don't really grok yet. They're like, wait a second, because they're all calibrated to Uniswap, where swap fees are going to liquidity providers, and then additional like front end fees are going to the Uniswap Foundation. Aerodrome is like a big, well-known brand from a DEX, but I don't think people really get what's going on with like the locking and voting component, and that's what is really special. And I think it's still a huge opportunity for everybody.
So, if all the revenue is going to voters, how does the Aerodrome organization make money? How is the Aerodrome team getting paid?
Yeah, it's great. I'll come in here because I'm the newest core team member, and I don't think I even appreciated this as somebody who was also coming from the V33 like maximalist cult. I was part of the VDAO and followed this thing from day one. But Alex and the rest of the core team took a very thoughtful approach to establishing the original tokenomics. And this is something that is underappreciated, I think. There's a lot of things that you have to be mindful of when you're launching a token and building a project in DeFi, especially if you have people based in the US. It's just not a friendly place to do things ad hoc. And one of the things that we considered was you have to look at, launching a token, especially if there's any kind of value capture mechanism. How do you launch this thing fairly? And how do you prevent any kind of regulatory inspection? So there's some things that we took to heart kind of with those things in mind. And one is we never sold a token. That's sort of we refer to that as the original sin. So as DeFi enthusiasts and purists, and we all come from liquidity mining DeFi summer days, like we wanted people to earn this token fairly. We also didn't allocate any individuals a token supply to vest and then eventually exit, cash out with. This model is really essentially there's a certain percentage of the total supply that's locked forever. So there's Foundation VE Velo and Foundation VE Aero that acts like a participant in the weekly voting and essentially earning rewards just like you or any Alice or Bob who's locked up some Aero or Velo and claiming those rewards. And we're very fortunate that we have seen so much growth. But yeah, I think the foundation model is another super underappreciated component of the launch.
Yeah, it's super interesting. And this is still one of those things I feel like in particular when we're talking to funds that kind of blows their mind, right? Because the whole industry right now, I think, is exhausted with the overhang of like locked vesting supplies becoming unlocked, this like game between like teams, investors, liquidity providers, and things like that of like who's going to dump on who first, right? And this whole system where it seems like basically we've been building so many protocols that aren't optimized for longevity, building tokens not optimized for utility, but all of this stuff basically optimized for exit events, right? Like protocols thus optimized not to like continue to sustain or drive more utility, but to create that really great like exit event that will make like funds and team very, very wealthy, but probably come at the expense of the long-term functioning of the protocol. And so yes, I mean, as mentioned, like the basic idea is simple in that rather than selling any tokens, so these foundations never sold any tokens, rather than allocating liquid tokens to team members that the utility of which, right, would be them eventually selling in some way to extract value. The foundations have locked token positions, and they vote each week, and in fact, they are often accumulating more or locking more tokens to sort of maintain their voting position within the system. And functionally, what this does is that it makes the foundations the same as anybody else. The foundations earn revenue the same way that any other token locker like earns rewards, the same as any fund like Coinbase Ventures, who's gone out and bought, a bunch of Arrow, locked it all, and is voting each week the same way they do. And this alignment of incentives, I think, is super, super powerful because there is functionally no difference, between the foundations and their ability to participate and benefit, and anybody else's ability to participate and benefit. And yeah, that usually gets us kind of like a shell-shocked reaction, right. I think, the first time somebody learns about this model, because it is, I think, exceedingly rare in the industry.
So I've got two questions, but I want to lead off with maybe an explanation of kind of the mechanisms involved in what you're talking about with voting and things like that. And correct me if I'm wrong, but so Aerodrome, Velodrome got emissions that are created by the protocol. Those emissions are directed to...
And emissions are more Velodrome, more
created.
Aerodrome tokens.
Right,
Yeah.
right. And so when you provide liquidity to pools, it's not like traditional Uniswap where a liquidity provider is receiving their rewards back in the swap fees by the pool. What they're being rewarded in is these emitted Velodrome tokens. And the way that those rewards are distributed across those pools is based off this voting mechanism that you're talking about. Yeah. So you vote on which pools are going to receive which rewards. So if that's correct, then I'll go ahead with my question. I just, we've been talking about voting and things like that. I want to kind of explain.
Well, and we might as well say while we're here, like the reason that you would vote in the first place is because those voters are compensated by external parties, basically, who are saying, okay, if you're going to go provide your liquidity, direct your votes to XYZ USDC pair, so you build liquidity on that pair, we will compensate you some amount of tokens or stable coins or like whatever the thing is that's being used to pay them. Will compensate you for voting for that pool, which will then direct emissions. And so then the utility could be for, you could imagine like a new token, or like a young token, or a something with low liquidity where maybe there's a lot of variance in the trading activity. There's a lot of volatility in the trading activity of that pool. Now you can create a predictable stream of income that will go to that pool. And so now the liquidity providers are like, oh, there's basically this like fixed amount of funds that's going to be compensating my liquidity provision over the next week, which is how often this occurs. Yeah.
But outside of just those bribes, you're also entitled to like the swap fees themselves from the pool, right? As a voter.
Yeah. As a voter. Yeah.
So my first question is, so you haven't sold, so there has been no VC money raised by either Velodrome or Aerodrome. It's obviously been tremendously successful. So I knew that one, but I kind of want to ask it just to clarify with everybody. Everybody, if you're listening, they both nod their head. They have not raised any outside capital.
Yeah. I mean, it's similar, to I think what any other participant is doing, right? There's always a balance towards some degree of like, these are good things to vote for because it helps in some way the like health of the broader ecosystem, right? So there's a portion on the Aerodrome side of the voting supply that is devoted just to voting for public good pairs, right? And if you think about public good pairs, that would be things like wrapped ETH USDC. That is the essential pair of an ecosystem, right? That is the pair that needs deep, deep liquidity on it for everything else in the ecosystem to work well. So there would be like a portion of voting going there. And there could be other sort of very good public good pairs, right? It might be important for the ecosystem to have liquidity on something like EURC, USDC. I think coming very soon will be like CBBTC, USDC or CBD, or pairing that with wrapped ETH, right? These are things that if we are able to build, quality liquidity on the sort of essential tokens of DeFi. And by the way, we're working with a partner now to bring every asset. So Solana, Doge, everything, right? We really want people to be trading everything on Base. But if it is like, if there's a public good case for building liquidity, that is one way the foundations may vote, and then the rewards generated through that is generally like reinvested into like additional voting power, right, to continue to support public goods on the network. And then there's some portion of it that will be also supporting things like Aero liquidity, because that's going to be important to maintain, because that's also essential to the whole flywheel. And then there'll be times where they're just voting optimally, right? Because voting optimally does two things. One is the whole idea of the system, and one of the novel iterations on Curve is that you only get the rewards for the pools you vote for. So it's not kind of like socialized returns, right? Because if you're a Curve voter and you're voting for a pool that's doing $1,000 in fees, or you're a Curve voter voting for a pool doing $100,000 in fees, you get the same kind of share of the total fees generated at the end. And that can lead to suboptimal voting, right? Where you maybe are allocating things, allocating emissions to tokens or pairs that are not creating a lot of value for the overall system. And so in voting optimally, you're actually doing a good thing for the system, in that you are rewarding the most productive pools with emissions. And then you are also, in theory, kind of getting the best rewards back because you're sort of voting for the most productive things. And so it's always going to be a mix of those things, some degree of like broader public good, systemic voting, and then some degree of just optimal voting. And both of those, of course, drive value back to the whole. Right. But that's very similar to what any project would do, right? They might be directing some of their voting power towards things that are helping them to build liquidity on their tokens, but they might also have times where they're just voting optimally, and now this is kind of a mechanism that's returning value in the form of incentives to them that they can then use to support themselves or initiatives.
Right, so when you say optimally, you're just saying whatever the highest return on your locked token is. Yeah. Got it. Very cool. So one thing that Phil and I have been talking about is, when we come to utility, like obviously AMMs are super sweet, and the way that the Velo Aero ecosystem is set up makes a lot of sense, like a very sustainable model with the token locks and the way that the fees are attributed and how everything is emitted. Everything makes sense, like based on what we've outlined, like that system makes sense. But then if we go a level deeper and we look at like what's actually being swapped on the exchange, do you see a lot of utility in the tokens in these pairs? Like if we were to say like, okay, the exchange makes a lot of sense, but what are people actually swapping outside of like ETH USDC that actually provides value? Are you seeing a lot of things that you're excited about in these pools, or is it kind of just, we're providing value because people want to trade these things, but maybe the actual tokens themselves aren't that interesting to you all? From
when it comes to like how intangibly valuable these tokens and projects are, I think that's up to the market to decide. People are going to trade if they want to trade it, and if they like using the protocol, whether it's like a game or a meme coin or a DeFi app. Long term, these projects have to sustain volume to receive emissions from this type of a DEX, because we know that they don't have endless tokens to incentivize voters. It's just not how it's going to work. So that being said, we do see a really great ecosystem being developed, especially on Base right now. I think Optimism has some of the kind of OG stalwart DeFi, and OP mainnet specifically. Now that they're expanding the super chain, Velodrome has some like core stuff on OP mainnet, but most teams, including us, are not focused on OP mainnet right now. We're focused on where do we want to go strategically across the super chain? Which of the L2s are going to be really exciting? Are they app chains? Are they general purpose chains like Mode and Bob and Fractal? Those are going to have like probably more organic DeFi and organic like apps that make that their home. But like, yeah, back to Base. I mean, we're seeing some awesome builders who like just appreciate the opportunity to get close to an excellent DevRel team like the Base team. Jesse has put together an excellent squad of like people who are already using DeFi when they came in. They're not like, the corporate Coinbase team that was shuttled into this new fledgling, startup organization called Base. I mean, these are either builders or users themselves. They're in the trenches, if you want to, use the colloquial phrase, um, and they are helping, I think, put a lot of the network effects together within the Base ecosystem, whether it's through referring projects to each other, organizing ecosystem events. I mean, I love when they do like the Base Builder events. It's really organic, and it comes from like a place of long-term sustainable builder mentality. Like there are no real tangible ecosystem incentives, right? I mean, there's no base token. They're not like essentially paying builders and users to come and use the chain. They're offering up different things like excellent infrastructure, great, probably the best in the world mobile wallet with a Coinbase Smart Wallet, and just solid top to bottom, RPCs and dev tooling like documentation. So I think that's pretty unique to Base, and I think obviously the 10,000-pound gorilla in the room is like Coinbase backing them. So they see the long-term vision of to like, let's make this our home. We know there's going to be liquidity. There's going to be users. There's going to be great DevRel. There's going to be great, ecosystem support and network effects. So yeah, we're, I don't want to like call anyone out, but go down the list of liquidity pools on Aerodrome, and you'll probably find some great builders.
Yeah.
And Ace, could you quickly just tell us what the super chain is? Because I think a lot of people won't be familiar with that.
Yeah. So Optimism is, I think everyone knows it as an optimistic rollup. It's a layer 2 built on Ethereum. Optimism wants to essentially extend, their network into an interoperable network of chains that are all kind of connecting and messaging to each other. So the OP stack is an open source layer 2. Anybody can launch an OP chain. The Optimism Foundation is maintaining this stack, and there's a lot of really great roll-up as a service providers who are making it like 3-button click. You can launch a chain and maintain a chain now. So it's really great. So the vision is to have sort of a much more efficient, scaled, and secure network of chains that all kind of talk to each other, and this is what they're referring to as the super chain. So it's very much a concept right now. The specs are being fleshed out by the devs, and we've been involved with some of that, like helping kind of guide the best decisions for us. We're probably one of the oldest native Optimism teams building, and we've already launched on a couple of the other super chains. But for now, it's a pretty, I'd say they're independent chains. We are building towards like a much more interconnected, interoperable, and composable network, which is going to be the super chain. And this is where I think Aerodrome and Velodrome start to diverge pretty significantly. Velodrome is going to start to service liquidity across all the chains outside of Base that are connected to the Optimism super.
So you had mentioned a lot of cool products being built on Base, but no, I guess, tangible incentives. I've talked to a couple of other folks at the Velodrome team, and we've kind of come to consensus that like attracting these builders, developers, and like people that are coming up with these ideas is kind of what DeFi needs to actually continue. Like it's a lack of talent, lack of ideas, things like that would be holding it back. So what do you attribute that? I guess you went through a list of, good documentation, good infrastructure, things like that, but is there anything else that you're seeing that's actually attracting these builders to Base as opposed to them just going to Optimism or going to, one of these other, chains on the super chain or Solana, anything like that? Like what is bringing people to Base? Like what could you attribute these massive volumes on Aerodrome to, right? Where is the hype on Base coming from other than just like the Coinbase branding?
Yeah, I mean, I would probably point to a few different things. I mean, one is like we've done this chain incentivization game for a long time, right? And I think builders know what that is, right? Which is it is not difficult to have a chain that's going to write you some sort of check, that's going to incentivize some activity on that chain that's going to find no sustainable traction. And as soon as the incentives end, activity users, whatever, move off, and it's, the same game. I don't know. We've been playing for like 3-4 years, whether it's on Alt L1s or now, on this explosion of Ethereum L2s. So I think there's a bit of like fatigue with that, especially if you are a builder who's really interested in not like just jumping around to whatever the most hyped or most incentivized thing is, right? You want to put down roots. You want to start growing. So like what is Base fundamentally offering? I think one is that at a high level, right, you've got a publicly traded Fortune 500 who is the most successful like crypto product company in history, who is saying that their goal and objective is to bring their business on chain. And you can believe them when they say this because, crypto, DeFi, all this sort of stuff needs to work if Coinbase is going to continue to grow and be relevant. So this isn't just an abstract experiment for them. They're saying like, we need to make this work, right? And Base is going to be the place where we're going to make this work. And what that opens up, I think, is user acquisition, product services, institutional sort of engagement at a level that you just don't see on any other chain. And so I think it's the combination of that, like this access to the like broad network effects of Coinbase, the user base, the like product company type focus of Coinbase, with the fact that they're also just trying to make this place the best and most performant L2. If you've looked at like the work that they've been doing over the last 6 months or so, just to drop gas costs as rapidly as possible on Base, right? To make it as cheap, as fast, as performant as humanly possible. I think you see that, that's like them thinking as a product company, right? That people will use the chain that is the best experience, right? People will use the fastest, cheapest solution. To get their institutional partners on board, it needs to be that way. For them to integrate DeFi rails directly into their products. And I think this is something that we're beginning to see the beginnings of, which is that your experience as a user on Coinbase is going to be increasingly blurred about whether or not you're using a Coinbase product or whether or not you're using an on-chain product that is sort of wrapped by Coinbase. And I don't think there's any other chain that has the credibility, I think, to say that they'll deliver the best experience and they'll deliver the most users and they'll deliver the most institutions. So that's, I think, why people are coming to Base, and they'll have stage 1 decentralization soon as well, which is very important. And I think migrating more users, projects, liquidity from Arbitrum, from Layer 1, and things like that. But I think they're in it to win it, and I also believe that it's very possible that the next big wave of crypto users, of builders, they might not know much actually about Ethereum. Like they're going to think that Base is crypto, right? They're going to think Base is DeFi, right? They're going to think all this stuff. And obviously the infrastructure on which we're building is Ethereum. And that's very, very important to making sure that Base works. But I think this is going to be the place that activity congregates. And that's also while unlocking the network effects of the broader superchain. So when you're onboarding into Base, it's not just about the Base ecosystem, but if there's a really incredible game or a really incredible social app elsewhere on the superchain, accessing that feels as seamless as operating on a single chain. And I think they're very, very interested in that. And of course, that's what we need to actually scale Ethereum, right? To drive enough value back to L1. It's just orders of magnitude more engagement on these L2s, and for it to not feel like a fractured, disparate sort of experience.
Yeah, that makes sense. And I think it's notable for people who, again, are not as familiar with one, Aerodrome and Velodrome, but let's say even just like the broader L2 DEX ecosystem. I think it's notable that you guys actually made the decision to deploy just on the Optimism chains, and you actually, as a solidly fork, effectively. Of course, you guys have your own nuances on how you guys, deployed Velodrome as the first iteration, but there are other solidly forks on other layer twos, right? On other EVM layer twos, and you guys, had the, when we chatted with you guys, through these years, you guys were like, okay, great, like that's cool, we're happy that there's.
You've eaten their lunch.
Well, look at this guy over here. He's, so I guess like I'm saying that because it's like, actions speak louder than words sometime. And so with that, my next question is, what is your opinion on, or what are your thoughts on sort of like the future of layer twos generally? I think we know how you feel about Optimism, about Base, just given everything that you just said, but what do you think about, the non-OP layer twos?
Yeah.
I mean, I hear great things about Optimism and Orbit. Sorry, Arbitrum and Orbit. I'm so hyper focused on the OP stack chains right now. Like I'm just not doing a lot over there on the Arbitrum side, but it's definitely important to keep track of what's going on across the landscape. Mantle still has a lot of excitement from kind of the Bybit backing, and I think what is really going to be great is like everyone expects us to be like a winner take all, but that sort of limits our thinking around what type of tech is capable of doing. So I know like Omni, for example, is like a protocol that's trying to connect layer twos and make them composable and interoperable. And I think that would be great. And would make, if you could improve the security and capital efficiency, even better. Some of this cross-chain messaging stuff is really excellent coming from like Chainlink and Layer 0. And I'm like, I don't know. I think it's too far out to say like, we know there's going to be a single winner. But under that assumption, like it's good for us to be aligned with Optimism as an ecosystem partner. They certainly have been a huge help to getting us to where we are today, both for Velodrome and Aerodrome. And I think the network effects that are being laid in each of the ecosystems are certainly because of the help we got from the ecosystem partner. And we've been extending, I think, a lot of those network effects to the new people that are coming in, new teams that are coming in. I really don't buy into the whole winner take all thing yet. I think it's way too early in this whole game of Ethereum scaling.
Yeah, I think it comes down to two things, right? Which is what is the stack that's going to be most adopted, and as of right now, I feel like the OP stack is doing that, right? In all the permutations of it, right? That we've got folks straight up forking it, going and doing their own thing. We've got folks who are engaging in the broader network of the super chain and all of that sort of stuff. So, what's going to be the core technology stack, the most performant one, the most accessible one? How many builders are you going to like onboard? And once you have the network effects, then it's going to be who's going to provide the best experience across those. Who's going to begin to abstract away this feeling of moving between chains, of seamlessly accessing liquidity products across these networks of chains. And I think the person who builds the greatest network and the greatest user experience between them it certainly won't be winner takes all, but it may take a large proportion of the total activity.
Yeah, I mean, anything that we look at, that humans make, it's, the 80-20 rule kind of plays out everywhere,
But imagine, especially when it comes to things like an AMM, like they only get better with more liquidity and more usage. If it's too fractionalized of a market, then that's not the best experience for anybody. Like you
Yeah.
kind of want that consolidated.
Yeah, because like I think about it like, once I started using layer twos, right? Once I started using Optimism, using Base, I didn't really want to go anywhere else anymore. And it's not like the friction is so high. It's like it's annoying, to bridge. It's annoying to like check security assumptions. It's annoying to like, okay, well, if I need to get out, how am I going to get out and all this sort of stuff. It's annoying, but it's not insurmountable. And generally, there's enough potential upside that you should be incentivized to do it. But I think once you get into a place where the experience is so good and the friction is increasingly being removed between a network of chains, and that those network of chains have everything that you would want to do, right? You've got new chains who are there, who are highly incentivizing, so giving you all that like upside opportunity, and it's like 2 clicks to access that versus like I need to figure out, if this chain's on a multi-sig, and then what the wait period for bridging is, and then how to get stuff out. Like you're just going to increasingly stay in that network, and that's where I think it's going to get super interesting, because I think if the experience is just crummier jumping out to another network or jumping to a monolithic chain, if you're getting everything you need in this like very diverse, interoperable ecosystem, just fewer people are going to jump around, and they might even take a little bit less yield or whatever, because it's just simpler, it's easier, they can do everything they want to do.
Right.
And I think that is very much the vision that Optimism is going for, right? And we'll see it, where we are in a year in terms of the number of people who are building on and participating in the super chain, the degree of that user experience that has been implemented that just makes it so much better than jumping to any other L2, certainly going back to L1, and that's like what I'm very excited about.
Yeah, for sure. I before all the L2s, I mean, if you wanted to make a swap on mainnet Uniswap, or if you were on Balancer, or if you wanted to take your liquidity pool token and you wanted to stake it in some gauge, I mean, you're talking about between adding liquidity and getting to the point where you're earning rewards. I mean, you might be in $50 on gas fees.
Yeah.
And it's, so that swap, and they've come down a little bit on mainnet, or quite a bit on mainnet, but just the user experience difference between paying that $50 and paying that, 50 cents is it's huge, especially for like a regular user. Like if you're moving, $50,000, like sure, you can eat that, but if it's me, I'm like, oh, I want to put $200 here, $200 there. Like you just can't do it. Yeah. And so
I remember I had to build a calculator to make sure it was the fees if we were doing any kind of strategy would justify. How long would the payoff period be before I regained my gas costs? It was bad.
Yeah. There was a point in 2022 where it was like all of a sudden like the market dynamics changed, and it was like, okay, you could sit in a pool for whatever, like a month, and you'd be fine. And then there was just like this moment right before Luna blew up where it was crazy. Like we were measuring basically the half-life of yields, like how long it would take for them to get like cut in half, and it, at first it was like whatever it was. I'd have to dig up the numbers, but it was like, beginning of 2022, it took like, I don't know, 2 months or something, and then within just a couple of months, it was like all of a sudden it was taking 4 days, for this to happen. It was something wild like that, and at the same time yields were being, not only were they compressing at that rate, but the overall level of yield had come way down. That was a crazy time. But that's
just commentary around, this yield farming concept, I think has been shelved quite a bit since like the 2022, mania cycle ended, or 21. There really hasn't been a yield farming opportunity that's hyper focused on layer twos. I know that kind of the end of the last cycle you mentioned Polygon, Phantom, but the layer twos, I mean, maybe a little bit on Arbitrum, not a ton though. It's like a later cycle launch. So my hope is, we're all expecting the Fed to start to cut rates. I mean, I'm not an economist, but I read stuff. I think Base is going to be a big benefactor of, some of that new liquidity coming back into DeFi. So, even if you're just like for the first time want to lend some stable coins on a money market and earn like 6-7%, that's meaningful. Like there's people out there who still don't even believe that's real. They just have never seen free markets before and open finance. And I mean, we've all been through the DeFi summer insanity, and I think the fact that it'll be on layer 2s will make it a lot more accessible, hopefully much bigger than the last time.
So what's next for you all as far as like you've got protocol built out? Obviously, you're building out some relationships to bring on new users and new partners, but like what is the next focus of Aerodrome or Velodrome, the ecosystem as a whole? Like what's Alex doing every day now? You mentioned traveling a lot. Is that just because you like traveling, or is it because you're actually there, you've got some business objectives you're trying to take care of?
Yeah, it can probably split the question a bit, right, between Aerodrome and Velodrome. I mean, so I think with Aerodrome, the objective for so long was just to become the leading liquidity layer on Base, right? You could think of it like the Arya Stark. We had to like cross off the names, right? First you got a top balancer, then you got a top curve, then you got a top Uniswap, and then you got to rack up the lead, right? And really dominate on your like capture of the total activity of this network. But once you've like captured that activity, it's all about growing the pie, right? It's all about doing whatever we can to continue to grow the Base ecosystem. So, we worked with the Base team in onboarding new projects and protocols to the ecosystem. We work closely with the Circle team around, their initiatives of bringing new stable coins on chain. I think you're hearing some really interesting things about Base, wanting to be infrastructure for payments generally, right? If you are a payment provider moving between USDC and EURC and all this sort of stuff, that Base is your infrastructure for doing that. And the great thing is we already have the tech, we have the infrastructure to be a better payment infrastructure than the big major players out there. You're hearing the Base team and I think Circle teams talk about bringing Forex on chain, right? And the ability to service these huge industries with massive amounts of volume and activity on DeFi rails. And so on the Aerodrome side, I think it's about that deep vertical integration now into the expansive suite of like product services and offerings that are going to be built on Base. So they're going to be serviced through Coinbase front ends that are going to be supported by the DeFi ecosystem, and to bring as much activity onto Base as possible. And for Velodrome, it's about that horizontal, going as wide as possible reach, because I think we're all feeling a bit of, I think, the L2 fatigue, right? It's like, boy, another L2 is popping up, and what's their take on things? This is real world assets, how's that going to work? Or, is it another generalized DeFi chain? But the best part, I think, about Velodrome is that if you're building a social chain, if you're building an NFT chain, if you're building a gaming chain, if you're building a DeFi chain, it doesn't matter. You're going to need access to liquidity in some degree. And also, you're going to likely invest in growth. You're going to incentivize that liquidity on your chain. And so Velodrome is there to service this experimentation that we're seeing across L2s, all these different ways and products that people are building. Some will succeed, some will not, but Velodrome's still there to support the liquidity needs across all of these different chains, and increasingly, make that liquidity interoperable. Solve this core problem of liquidity fragmentation across L2s. And so yeah, I mean, Aerodrome's going super deep. vertically integrated on the Base side. Velodrome's going very wide across these super chains and connecting them and their liquidity all together. And yeah, I mean, it's going to be a lot of work for us.
So you just mentioned like the potential of Forex being settled on chain. That would require, at least with the AMM model, it would require the liquidity providers to have inventory of like both those assets. So like the USD, EURC example, they'd have to have that risk on their balance sheet to facilitate that liquidity.
Yeah.
Are you guys seeing any like conversations with? Is this like a thing that's happening now? Are there conversations with potential liquidity providers that would do this sort of thing? I don't know if you can share any info on that.
Yeah, this is a top priority for the Base team right now. Is I guess what I would say. Yeah.
Okay. Yeah.
I mean, you can just point to the growth of the liquidity pools organically. I think there's already like 7 million EURC, USDC liquidity after like 3 weeks on Aerodrome. So, perhaps there's market makers looking at this. I mean, I think it's way too early to start to talk to those guys, because market makers are really just starting to look at on-chain market making on Base right now. I mean, they've been so focused on mainnet and sort of their own OTC desks, but there's real opportunity now with the volumes coming out of Base. So yeah, maybe Forex is going to bring in a whole new crop of players. But I think, very simply, like Coinbase is showing how easy it is to buy a cup of coffee with the USDC in their app. Like, what if you're in Spain and you only have USDC? You can just swap with your EURC, and on the back end, it does a swap from USDC to EURC. So.
Yeah, that's cool. I think that's the way the automated market makers work. I think it's underappreciated that it really does kind of give you this liquidity on demand, and there's versus like a central limit order book that doesn't necessarily work the same way. Like that liquidity on demand might not be there because it could be so thin at the top of the order book. So I think that's an underappreciated benefit of the, at least for, let's say, a retail user who might need just smaller swaps for those underlying assets. Now, you brought up market makers. I would be curious to get your thoughts on market makers and sort of like their dynamics as it pertains to the automated market makers, because there's with other DEX teams that we've spoken to, there's usually kind of this attitude with the market makers that actually they're just toxic flow as far as we're concerned when it comes to our AMM, because anyway, I'll let you guys give your thoughts.
Yeah, I mean, there's two dynamics here, right? There's like market makers in the context of a new project or protocol is looking to build liquidity on their token, or ensure that there is some sufficient degree of liquidity on their token so they could be actively traded. And I think one of the coolest things is that it basically removes the need for those types of market maker deals. That you can organically, through the use of incentives, through the permissionless contracts on AMM, incentivize liquidity providers, via voters and all of the stuff that we sort of covered early. So I think one interesting thing about the relationship between particular DEX design and market makers is that for many projects and protocols, we're actually offering them the ability to get what they get through market makers, but entirely permissionlessly, and probably a much more capital efficient way. And of course, we know how some of those relationships have historically been kind of predatory or suboptimal, in their design. So I think that's one aspect. And actually, I feel like, over the years, I see fewer and fewer projects launching on us or building liquidity with us who actually have market maker relationships. They are going the DeFi route of bootstrapping and sustaining liquidity. in terms of like market makers just generally participating in the system, I think we love it, right? I think
Volume is volume, right?
Volume is volume, right? And, you know, we don't worry too much about toxic flow because, you know, goal is to be the leading place to trade these assets, right? And if folks are going through like a lot of high frequency, you know, trading and arbitrage across, you know, Coinbase, Binance, RDEX, like Ethereum mainnet, like we love that because we are, you know, the hope is that over time, you know, the core pairs of Ethereum are dominantly traded on Base and are traded on Aerodrome. And so, you know, we're very excited when we see, you know, market makers engaging in their most sophisticated strategies on DEX, right? And the fact that, you know, gas on Base is the best on Ethereum L2 means it's in their interest too, right? To make these pools the primary pools because they're some of the most cost efficient to engage in these like high frequency strategies. So yeah, we're very, very excited about that. You know, we want pools to be optimal, generating maximal volume. We want everyone to be participating, anyone who's engaging in, you know, any sort of market making strategy.
I also have a theory, and I don't know if this is going to play out. I constantly have these crazy long-term, you know, where is this going? But I actually think market makers could potentially be a very valuable long-term holder of like VE NFTs. So long-term fees will all go to the voters, and the voters hold VE Aero or VE Velo.
And VE NFTs, those are the voting versions of the Velodrome Aerodrome token. Yeah.
Right, the locked tokens that are used, that are used to vote. And you know, I guess it doesn't matter, but they are NFTs, which makes them transferable, and that's a cool benefit, potentially composable too. So if a market maker has a large inventory of tokens, and oftentimes they select pools that generate the most volume because they really just want to get the fees, they probably need to hold a VE NFT, like a VE Aero NFT, and vote for that pool that they're providing liquidity in to get the fees back. So, you know, I'm hoping that they start to kind of catch on to the model and buy in a bit, you know, instead of saying, oh crap, like we're going to get beat by this AMM and this like innovative incentives model, we might as well join. And, you know, I don't think we're there yet, but yeah, one step at a time.
So you're saying they would essentially buy these locked positions or lock their own tokens to get like fee rebates, essentially.
Farm it and lock it, and then vote for the pool they're providing liquidity in and get the fees back. Yeah,
got it.
What do you think of, give us your harshest words possible for non-EVM layer ones.
Centralized? That's not harsh, but it's just true, right?
That's who you're talking to. Right.
Yeah, I don't know why do they need to exist? And if you are an institution, right, like BlackRock, who wants incredibly neutral, secure block space, you know, why are you going to take a flyer on some of these alternatives? Like the why does this thing need to exist is, of course, like probably the core question to our whole space, and could like get us out of, you know, all of these speculative cycles. But I feel like in particular on the layer level, it's just like how many hundreds and hundreds of millions of dollars has been like shoved into investment into chains that produce like less revenue than like a single day on Aerodrome does, right? Like,
billions if we go back to the the ICO days of some of these tokens.
Yeah.
Well, I guess my question would be like to kind of to push back a little bit.
Yeah.
Do you think that the Optimism architecture is going to be fast enough for? Because you know, it's like we just think about like the sheer quantity of transactions. Let's just say of like a market maker, you know, like on NASDAQ, you know what I mean, or whatever.
Even Forex stuff. I mean, if you're looking at
Oh yeah, it's even
50 bips of Forex volume, like that's a tremendous amount of money.
even more. Yeah, even more than equities. Yeah.
Yeah.
Do you think that the optimism stack, you think it can handle that?
Yeah, so I think one of the ways in which the OP stack and the super chain is being configured is in a very modular fashion. So it's very much part of their roadmap that they will have ZK chains, right, as part of this broader network. And so yes, like I believe that the way in which they're building things out is such that they will be able to integrate and optimize chains that just get faster and faster and more dialed in for whatever the particular use case is, right? You can operate on the OP stack, you can settle on Ethereum, you can tap into the super chain, and then you can also design your chain to be highly performant, within a particular like optimization vertical, and that'll be different depending on what you're looking to do. So yeah, I mean, I think this is definitely their vision. I think even the optimistic rollups will get more and more performant. This is like a religious doctrine, I feel like, on the base team, just to drive the speed and cost down more and more. But it's also going to be about bringing in like new technologies like ZK and other things to augment the broader network as well.
Yeah, I think Alex nailed it with the modularity. It's like we already saw some Ethereum layer 2s that are using different data availability layers, so maybe that's one way to like fix some of the latency issues. I mean, execution environment, like some of the stuff we're seeing with Move and Solana is pretty awesome. But I mean, the question is, are those even fast enough to do what some of the database type systems do at the stock exchange? Like, I don't think so. So if we're talking about rebuilding the entire financial system, maybe we need to just think about the whole design of it and like think about like what type of value is being provided at that, like, sub millisecond type frequency. I don't know. Yeah. I'm not the right type of person to ask.
Yeah, and actually, this tie it back to talking about Coinbase. They'll be super transparent that when they started down this path of building Base, they looked at developing their own chain. They looked at deploying an alternate layer 1. And their intention is to bring all of their business, all of their institutional partners on chain, to really build out this on-chain economy. And as they weighed the pros and cons of all of this, their choice was, one, it's got to be on Ethereum. We need this like credibly neutral block space that nobody controls. This is where the consensus is going. Two, the best tech stack is the OP stack, and the best vision for interoperability and building these broader network effects is the super chain. And if they're betting their business on it, selling their own institutional partners on making the same types of decisions, I think that's like very like reassuring in some ways that this is the direction things are going.
Don, what else you got?
That's it for me. Any parting words on you guys' side? We got an hour and 20 minutes here that we'll cut down a little bit, but
I don't know. I've just been thinking about it. We had a conversation about Coinbase on our team weeks ago. I think it could be the next Amazon. I really think that they're doing things differently and it could be massive. But what are you guys' thoughts on, if they're bringing their whole business on chain, about the whole business decentralizing? Like, what are your thoughts?
When you say the whole business decentralizing, you mean like, what's the CEO's name? Ben Armstrong?
Brian Armstrong.
Yeah, Brian Armstrong. He's just gone and it's just all DAO? Or are we talking
like shapeshift?
Yeah, exactly. Yeah. I don't know, but like, if they're moving the business on chain, they'll have their assets on chain. They'll want to have, security and decentralized kind of curators. And I'm wondering if like the power users in Base become more involved. Every day, like we get closer to the Base team.
Right.
I'm sure the other participants are. And yeah, I don't know. Like we talk about this like hypothetically all the time. Like, oh, Twitter's going to decentralize, launch a token because Elon Musk loves crypto.
Right, right.
Brian Armstrong actually works in crypto.
Right, right. He's a big fan.
Like,
Yeah.
yeah, and with the current, Gensler at the helm right now, things are a little difficult, but I don't know. I think in the future we could really see the whole business landscape reshape around how a company is organized and who's running it and how decisions are made. And the stuff we're doing here is like awesome. It's a better working experience than I've ever had in my entire life. And
Right.
I'm not a spring chicken. So I would love to see kind of some of the principles that we've permeate outwards. And I'm thinking that that's going to happen.
Yeah, it would be interesting to see. I would prefer experiments like that not be done at Coinbase scale at first. Yeah, I think they're too important to they're doing too many important things for them to be like, oh, I wonder what would happen if like we just made all these degens in charge of how we do this. But I think long term it would be very interesting, and I think that you guys, based on what you all are doing, you're kind of setting the groundwork for what an organization could look like. Obviously, Coinbase is, I don't know how many people you have on your team, but it's not as many as Coinbase. I know that much. By I'm sure multitudes.
But I mean, I think the examples that have worked, if what we're saying is like we're talking about like DAO structures or something like this, some kind of like flattish decentralized structure. I think like the versions that work, DAO / foundation, right? Like let's expand that definition a little bit. The examples that work, I think, are the exception. Not the so far they're the exception, not the rule. So yeah, I hear you, Dalton, that you'd rather see not Coinbase. Give that a shot.
Well, I think you also like you've had like visionary leadership at Coinbase, like having a centralized authority driving that innovation forward is valuable and important. But if you're just talking about like from a technical side, like distributing the entire business and everything's on chain, like to me that would be easy peasy for them at this point. I mean, they've set as much as they need to, other than like the fiat on and off ramps, which they would clear.
Well, I think even if we look at like Polymarket, I think is a really good example, right? Like Polymarket uses, they're using Polygon to run their business, right? And I mean, they don't have a token in that case, but they're actually using, like, it's an actual example of using blockchain rails to deliver the business, and they're, a centralized entity. So that's not quite what you were asking, Ace. It's almost like the opposite in a way. It's like centralized business using decentralized rails rather than decentralized business plus decentralized rails. I wonder. It depends on what the product suite looks like. I wonder, what the regulatory environment would have to change. It's like right now we obviously have the narrative of like real world assets, and we haven't really, we kind of sort of touched on that topic in this conversation, but depending on what those real world assets look like would regulators, like what kind of governing entities would they require to like sort of like touch those things? Would they allow those on a chain that operates and we're sort of like the entire stack of people touching those products are decentralized? I don't know. I sort of, at this point, I kind of doubt it, but it's, I guess that's really all I have to say. I feel like at least I have had these sci-fi hopes of a sci-fi world, not being recorded. This is being recorded. Okay, hang on one second. Heads up, Ace's recording will continue on a new track for Ace due to changing their devices. Okay. You still there, Ace? Oh, I think we lost your...
He's muted.
Looks like you're muted. Looks like you're muted there, Ace. Oh, we lost him. It's all right. He'll be back, but I think we're kind of getting to the end of this conversation anyway.
There he is.
There he is.
Sorry, guys. My headphone died, and it just like completely cut me off.
All good, all good. Yeah, you're a little quiet, but I think we can turn you up when the actual recording is done. But
Okay.
yeah, I think I was saying that I've had these hopes of this sci-fi world, and this decentralized sci-fi world, and it's like the both of you said, Alex and Ace, at the beginning. It's like there's I think there's some fatigue from folks who are in the space who've been in this for even just a couple or a few years at this point. It's like, all right, what are the structures that are actually going to work, and and I sort of mean that across the whole stack. It's been great speaking with you guys to hear about how you guys are building a successful decentralized exchange. But again, I think that this is the exception, not the rule. And yeah, go ahead.
I was just going to say, I mean, I wouldn't consider, correct me, I wouldn't consider like Velodrome or Aerodrome as a decentralized team. I mean, you operate as a centralized entity, like controlling the direction of the protocol. Like I guess it depends on what you mean when you talk about a decentralized entity. I think that centralization definitely has its value. It's a valuable thing when you're looking to move things forward. I guess once you transition something to more of like a utility, then yeah, you can decentralize and figure that out. But at that point, like, what decisions are left to be made if you're just talking about keeping base running or something like that? Like, you're just trying to move things, keep things going, not necessarily innovate, push things forward. Like, that's incredibly hard to do the more and more decentralized it gets.
Yeah, I hear what you're saying. I mean, the idea obviously is to be as like delegate and include as many people in all decisions that are being made. And like, I just want to give Alex and the core team like a ton of credit for building a culture that like, I think we've created something that's extremely aligned internally. It's not just like how all the stakeholders are operating, and this is the whole 3-3 concept that gets overlooked, I think, a lot. It's just like aligning people in a long-term direction. Like, we don't talk about Olympus DAO too much when this whole 3-3 thing, but I think it's mostly the social layer that's being created, both within kind of the Velodrome and Aerodrome organization, as well as the broader stakeholders and the networks. And yeah, it seems like there's a lot of intangible benefits of cooperation that, make it a really special place to be right now.
It's great to hear. Glad y'all are enjoying what you're doing, despite the tiredness that we experience sometimes.
Dalton, any final questions?
No, that's it for me.
Guys, Alex, Ace, really appreciate you making the time. This is really a pleasure. And yeah, like I said, Velodrome, has a special place in my heart and in my time in this crypto industry. So it's really been a pleasure to be able to sit down with you guys.
I was actually a 0x DAO guy back in those days.
Well, we were. What's that?
That's a throwback.
Yeah, man. Oh, that was fun.
Yeah.
I mean, those. Like I said, I was reminiscing with you guys before we started recording here, but yeah, it was like I went from a very institutional allocator job, speaking to like the largest, like working with the largest hedge funds in the world and this sort of thing, and then it was like, then going into crypto, and now I'm in well, at least at that time, it's quite different now. The industry has really matured at an extremely rapid pace. It's actually pretty staggering to think about what it was like 3 years ago in Discord channels. I mean, those still exist now, right? That still is a thing that happens, but it was, everybody was sort of thrown into this arena together. You had, startup funds in the Discord channel. You had, retail folks in the channels. You got these people making these memes for this battle. I guess just to reminisce a little bit, because this is fun for me. This is fun to think back on this. But it was like this battle trying to acquire TVL for Solidly, and so then you had the VE DAO and OX DAO being created, and they were just trying to get people to deposit funds into these like wallets that they created into their vaults, and shooting these shots at each other with the memes. And yeah, that was, like you said, Alex, at the beginning, it was like, that really was, I think, kind of the, it was like the, as far as like, the DeFi yield farming days, I guess, like sort of like the DeFi summer sort of like phase, that it really was like the end of it. It was, but it was like a nice,
I mean, that was what, a month before Luna blew up? Like,
was it that? I think that was, it was in like January.
A few months.
Yeah, it was
months,
yeah.
yeah.
Yeah, it was like January.
I remember things got sad quick.
Yeah, and then that was it was. But I mean, it's like, okay, so I said I was getting a little.
Yeah, he's back.
But okay,
Second wind.
Here's one more. Here's one more little thought. It does feel like we're kind of the way that I feel this industry is. It's like the after the .com bubble blew up in like '01. You look at the performance of, let's say, the NASDAQ from that period, right? You had like a decade, where I guess it was kind of like around '08 where its NASDAQ sort of got back up. I believe it was around all-time highs at that point, and then of course we had '08, and then it was it took another period of time. But you had like, really from sort of breaking the prior all-time highs of that, that sort of like risk spectrum of the market, it took quite a while, and there was sort of this phase where it seems like the tech industry was like, all right, we got to figure out what actually works, because it's like we hear about the examples like pets.com, and whatever and stuff like this. And it feels like that's where we are in the crypto industry. It's like people are tired of just all these different layer whatevers. It's like, all right, we got to find the things. We got to find these tokens that are generating actual cash flow. Because it's like, from our perspective, it's like if there's only a few things generating like actual cash flows, it's like, okay, well then the industry implodes, and it's like we have a tradable universe of 5 assets, and that's not fun. Yeah. I don't think that's what it's going to shake out to, right? But I think that I think the industry right now is kind of like at a it's like at a point where projects have to prove themselves now, and it's not going to, I don't think we're going to ever be in a 2017 scenario again. I don't think we're ever going to be in like a 2021-ish kind of scenario again, at least not for a very long time.
Yeah. I mean, I've got confidence in the industry as a whole because it does truly unlock things that are just not possible, without the underlying tech. The fact that we can bring institutional level scale and complexity products and services on chain through immutable code is just mind bending. And so yes, there's all this insanity, speculation cycles, gambling, everything else that we see go on. But the core promise of what this unlocks is so incredibly exciting that I think it's just a matter of time. And I'm very happy to see us maturing. I'm very happy to see us maybe reevaluating, some of the excesses of our past, because that's what we need to do if we're really going to have the kind of global disruption that we're all here to help create.
Right.
Well, guys, I think that was perfect spot to end it. I'm not going to give any more of my little thoughts off the top of the head here, but Alex, Ace, thank you guys for your time.
Thanks, guys.
Thank you so much.
Thanks for having us, guys.
There he goes.
Thanks, guys.